gone 9:11 a.m. as we head into the second half of this morning's edition of News and Views right here on Salam Media. And what we are going to do is taking a look at the month of July. And July, we've come to know it as the savings month in South Africa. Now, this is a campaign that is dedicated towards raising awareness about building emergency funds, about avoiding high interest rates and debt, but also improving your overall financial situation. And this is the reason why this campaign is driven in South Africa to encourage us to make savings a necessary part of our financial planning. And we're joined now by the CEO of Baraka Bank, Shabir Chohan. Shabir, assalamu alaikum wa rahmatullahi wa barakatuh. Jummah Mubarak to you and welcome.
Inayat, walaikum salam wa rahmatullahi wa barakatuh. Jummah Mubarak. It's always a delight to speak to you and to be on your show. Alhamdulillah.
Yes, Shabir, from time to time, obviously, Al Baraka Bank reminds us of our financial well being and our financial health. And this month of July is just so important. It is so relevant, particularly in the times that we find ourselves in. We know these are difficult this is a difficult economic climate that we find ourselves in, together with a lot of other issues that are playing around, which impact and affect us in terms of our financial health. But we need to take serious note of the messaging. And one of the messaging is the month of July being the National Savings Month.
Inayat, it's a campaign that's being run by the authorities. I mean, as you know, every July is National Savings Month, and it's a very important reminder that people need to save more. And a reminder that financial security is not built overnight. It's created through small financial decisions that we make every day. The big issue is in South Africa, household savings rate is very low by international standards and even African standards. And I think it's a big problem. It's recognized by the authorities, and hence there's a campaign for people to increase their saving levels just to get up to the levels of other countries. I think it'll take us a very long time because of various reasons, but it's something that needs to be emphasized, and people must continuously be aware of the fact that we need to increase our savings levels in the country.
Yes, certainly. And also, I think when one looks at some of the objectives and the goals behind National Savings Month, and whether the goal is, obviously to survive during this difficult period in the current economic climate, but also in terms of long-term financial freedom and long-term financial savings. This is important because there are two aspects that we are going to be talking about. One is savings, but also at the same time looking at it from a financial planning perspective.
Yeah, I think it's the point that you raise, and sometimes people will look at it with regard to savings and investments. Savings is short term, investments is more long term, and I think at some stage you need to have a program just on retirement funding and how you plan for that. But on the savings side, it's an immediate priority. Yes, things are difficult. Sometimes people can't live with the income that they get just to meet basic requirements. And on that basis, they'll probably say that it's not the right time to save. But I want to emphasize that the savings has to start at some stage, and we can probably talk about that more as we go along. So savings, short-term investments, long-term. But I think the savings month is focusing on making a start to get people to start the process, if they're not doing it currently, to have a formalized savings program.
Shabir, to start the process, let's just talk about some of the practical steps that people need to consider and think about.
I think the first issue is everyone needs to do a budget. We don't have unlimited income coming to us and or from clients' point of views or your listeners. So start off with a basic budget, whether it's done on an Excel spreadsheet or on a page or wherever, is to have a look at what are your expenses, and from that, what is your income. Obviously, if your expenses are more than your income, you've got a problem, but that will also help you from a long-term savings point of view. Once you do that, um, one of the big things is, even if there's no capacity for that, is to put a line in your budget for savings. That amount can be as small as 100 rands, or it can be whatever is affordable. So automatically at the end of every month, you first got to pay yourself, and that paying yourself goes into a savings account at any of the institutions. And I think most of the institutions, they do have savings accounts, and it's very tax, so very cost feasible. The second issue is to work out what's your goal for savings. I mean, I think most of the people will look at a savings plan is for an emergency, or to plan for some goal, whether it's for education or home ownership or umrah. And if you set that out very clearly, then that will be the step that you can take. I think very importantly also, I think when you're doing this, there's a lot of tools available. The simplest thing is if you take an Excel spreadsheet and work that out. The second issue is now, I think in this day and age, artificial intelligence and chat GPT, I've heard of remarkable objectives when people took the information, put it into Chat GPT, put the bank statements in, put the budgets in, and then you're getting a personal advisor. Besides going to an institution, you can also get that on a digital basis. The third aspect is, I think the first stage is when you're embarking on a savings program, is to look at an emergency fund. An emergency fund is possibly for some reason you're not getting your regular income. And even if you start off, the ideal situation is to probably have an emergency fund for 3 months or 6 months. But even if that's not possible, just have an emergency fund for 1 month or 2 months. Because what happens is people are normally living from month to month. By the time they get the salary, it's already spent in the first couple of days. And I think that's the majority of people out there. And I think if one embarks at this very high level, the plan of actually making sure that you're paying yourself, even if it's a small amount, and then increasing it every month or every 6 months or every year, then they will be embarking on a formal program to achieve a savings objective.
Shabir, I quite like what you are saying with regard to the emergency fund because we've seen so many surprises over a period of time, and the most recent one was the price of the petrol price with the war that had taken place between the United States and America, and many people were actually caught off guard. And just that emergency fund is absolutely so critical for events, unexpected events, like, for example, a war that may break out. What we are seeing in South Africa at this point in time, whether we call it xenophobia, Afrophobia, it is impacting on people. And, the key question here is how does one actually, and you speak about a budget in terms of prioritizing, what is necessary spending versus what we could possibly consider excessive or even luxury spending?
I think the point you're raising about what's happening, because remember, the one issue is, if one has to have a look at it, you find that salary increases at a rate much lower than what the cost of living increases are. For example, if you just have a look at services and your electricity bill rates, water, etc., that's increasing quite significantly, having impact. And also, as you indicated, the petrol price, inshallah, it fluctuates, and every now and then there's all surprises coming across, whether it's coming down or going up. So when you're looking at it, you have to prioritize those expenses. Sometimes there's needs, there's wants, there's impulsive purchasing. But if one goes in and prioritizes, do they have clothing accounts at some of the chain stores? Do they actually need that? Do you really, really need to take on debt? Do you need to reduce your debt? So one of the issues that comes in when you're saying prioritization is people who are in debt will say, I don't have any money to save. My kind of view on that is, yes, use your savings to reduce your debt and It's a behavioral psychological issue, and to save, even if that savings amount is a small amount. Because what it will do is automatically, once people get the taste of being debt free, then they'll automatically be saving more towards their objectives. And I think the major issue in IAT is a prioritization process. Take the expenses, put it in, and just ask the question: if I'm not spending on the gym membership, or if I'm not spending on going out for meals, what will that impact be? And if you work on the objective of, listen, even if I'm going to do that, just make sure that I have a budget for the savings and make that a non-negotiable issue. And I think that will make a big difference.
Yes, Shabir, just in terms of professional services that are being offered, and I'm sure Al Baraka offers these services as well, and particularly with regard to financial planning, which is absolutely important. This is critical, and you speak about the debt trap and people caught up in debt, and also in terms of encouraging savings. From an Al Baraka perspective, what sort of services does Al Baraka provide?
I think, yeah, Al Baraka services, other services, etc. I mean, one, you'll have a consultant at a branch that can give you advice in terms of opening up a savings account, which type of account, what's the rates on that, and making sure that that meets your requirements. But over and above that, then you have got specialists, people who are financial advisors that will advise you to invest in deposits, in unit trust, and in products that are not even in the Al Baraka portfolio, because they're giving you the best advice as far as that is concerned. For me, there's financial advisors throughout the country in the different branches that can be available to come and see you. But Inayat, the major issue for me is probably we made a mistake in that basis, right? Coming from a business background, when you look at it, and when my father had to pay university fees, he probably went into the business, and the business paid for his fees, etc. I've seen where I work with colleagues in other corporates, especially with people that have had working parents in professions, etc. They're planning for savings and retirement starts off at a very young age. The reason I'm saying that is they all had financial advisors. Yes, there's a fee to pay for that, but those financial advisors help them through the process, where such that in the previous organization that I worked for, my CEO, and I eventually took over his position, he retired at the age of 53. And I was thinking about it and reflecting on it. It's because he had the discipline of saying, I'm going to save and I'm going to have a financial advisor. And I saw him in operation to meet the financial advisor on a quarterly basis. Had a formal meeting, looked at his circumstances, looked at what has to be increased, what has to be decreased. So I think, yes, the first stage of this is to make an appointment with your institution. And I think some of the institutions may not be dedicated to this, but you have to appoint a financial advisor. There is a cost element, but in the long run, you'll see those benefits of that. And I think that's a very important issue. As I said, I'm looking forward to come onto another show on long-term planning, because in South Africa, people, when they even retire, I think only 6% or 8% of the people can retire comfortably. Everyone else is dependent. But the first stage of this is a saving scheme that has to commence, and automatically, if that behavior continues where you're increasing it, then yes, you can meet your financial advisors to take that forward.
Shabir, interesting when we're speaking about savings, and we're speaking, at a household level, on an individual level, but also at the same time, one can extend this discussion to a business level as well, because in many instances, we find that a business will sustain a family. Now, can we draw the distinction? Is there a difference between, how one would actually manage savings and profits generated by a business versus a household, because sometimes you'll find that your household expenses actually drain your business, and that impacts on sustaining a business in the long term.
Inayat, one of the issues is I was having a discussion a couple of years ago with a business person, and you were saying, no, 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 if I have any surplus funds, I will invest it in my business. I can make a bigger return on the business. And for me, I don't think that's the right way of looking at it. You got to separate your business from your personal savings and your personal budgets. Because if something goes wrong with the business, you don't want it to affect your business, your personal circumstances. If you haven't planned for unit trust, investment, savings, etc. So that's the first issue that needs to take place. The second issue is, I'm going to answer the question, but whatever you do, make sure there's a diversification in place, that you're not putting all your investments in one category. I mean, I was driving in Durban in one of the streets, and there's a big board there. Do you need returns of 15%? Sharia compliant 15% return. I'm saying, that's so tempting that how sustainable is that? Is that just enticing people to take their funds, etc.? And that's a very important issue that our community needs to be aware of. When you look at the business, from a business side, the business, unlike what my late father did, was saying, listen, if we have to budget, probably never have a budget, but if you want funds, take it from the business. And at that point in time, things were very cheap, I would think, compared to now. You can't do that now in these days. You have to work on the budget and say, listen, from the business side, this is what it is. We pay the amounts across to the individuals. They got to live within those requirements. If you don't do that, you find that, yes, businesses do save. They are actively involved. But there's been a lot of failures with business because as the family gets bigger, there's more people coming into the business, and then that cake has to be split so many ways, and that's where the problems actually occur. We see that all the time when there's no discipline and there's more and more people coming into businesses and the saving doesn't take place. I mean, you've got to treat it as two different issues. One is the business, and the second part is your personal savings. And each one should have a different strategy. On your personal side, even if you're getting a salary from the business, take that and invest in your own products. On your business side, make sure you follow the same issues where you are doing your cash flows, and in case you have a bad month, how do you actually sustain that, and you don't have to keep on borrowing funds to sustain your activities. So that's an important issue in IAT. And as I said, from an experience point of view, we do see clients that where they don't distinguish between these two aspects. When the problems actually occur, sometimes it leads to the loss of the business, which is unfortunate, and we're trying to prevent that from happening.
Yes, Shabir, also, I think what is important to understand is your savings and where those savings are going to, and what product, what institution that is going through. Because, we are talking about making sure that these are credible institutions. And, we may see billboards, we may see advertising that sometimes the returns are too good to be true. And we see many people in recent years that have actually been caught in a lot of schemes where the returns are too good to be true, but also some of them in schemes like Ponzi schemes as well, where you have this expectation of unrealistic returns.
The point that you raise is very valid. And I think whether it's here in Durban or in Johannesburg or Cape Town, there's been these schemes where people are enticed because obviously people want to maximize their returns. They want to make sure that they're getting a higher amount to live or for savings, etc. But human beings being human beings, there's a greed factor that comes in, and they want to get rich very quickly. You know of the situation in Durban. There was a big property company where they were guaranteeing returns, and it was increasing every year, and they raised a significant amount of funding in that regard. When the problems actually occurred, there was a significant reduction in the value of those investments. So I think when people invest, they have to be very careful. Just make sure that they are engaging with an institution that is registered with the Financial Sector Conduct Authority, that's FSCA, it was previously the FSB, or they're dealing with an institution that's regulated. Yes, there may be other investments that may be outside that, if you do have an appetite for that. And I think people take a percentage of your investments and put it into those high risk categories. I'm going to refer to them as high risk categories because you have to check on the governance on those organizations, the succession planning of those organizations. What happens if that person is no longer around? You never know when you're giving monies to institutions or to individuals who don't have a very strong governance. They're not subject to King 5. They're not subject to reviews by the FISCA, by the Prudential Authority, that's a reserve bank. Um, how do you know that the financial statements are being prepared, that there's an AGM held, that the type of accountants that they do have? And I think when you have registered institutions like banks, like institutions that are linked up with the Financial Sector Conduct Authority, they do the work for you from a governance point of view. And I think it's about time, especially our community, they're not just enticed by greed and they do additional work. They can be very clever people. There's very intelligent people, very experienced, that have lost a lot of funds because they're depending on family members to make recommendations and saying, listen, I think that's a good investment, etc. I'm not saying it's a bad investment, but if you do put additional amounts in that, make sure it's a percentage that you can lose if it goes down or if it's not successful. And for me, Inayat, I think we probably need to talk about these issues more. We're trying to arrange with the authorities to talk about the Ponzi schemes that have existed, not just in our community, but in the country. And how do you prevent people that have worked extremely hard to not lose those funds? So it's an important topic and maybe it needs another discussion.
Obviously, and some of the money they've lost, Shabir, has been emergency funds that we are talking about, lifelong savings for a particular purpose, people wanting to go for Hajj or saving for a property or whatever it is. But they've people have lost a lot of money over the years. Shabir, just finally, just looking from an Al Baraka perspective as well, in terms of the, and I know you spoke a bit about, at branch level and also looking at perhaps, some of the products that could assist people in taking advantage of July and the savings month.
The one advice I want to give, right? If a person hasn't got a savings plan for themselves or even their family members or kids or grandkids or great grandkids, it's very easy to open accounts right now. Accounts can be opened up digitally. The institution that I'm involved in, if you open up a savings account like a monthly investment plan, there's no cost on it. You just transfer the funds across and that will accumulate. So you've got your monthly investment plan, you've got your Al Baraka regular income provider, which gives you a monthly return. You've got premium accounts, you've got unit trust accounts. I mean, I've got grandkids, and the first thing I've done is open up a unit trust account. And believe me, if you just do that on a forced basis, those Sharia compliant unit trust accounts, after a couple of years, there's a significant amount in those funds. In fact, I was quite surprised how much is accumulated. So I think from a savings accounts, yes, if for some reason people can't come across to a branch, then maybe arrangements can be made to look at how accounts can be opened on a digital basis, whether you're using Teams or Zoom. And that's what's happening now. But my advice to people is whichever institution you are, and if it is Al Baraka that you want to invest in, call the toll free number 0860 225 786, make an arrangement, open up an account, save as low as 50 rands a month, and we allow that. Save as low as 100 rands a month. But as long as you start the process, and I think more importantly, Inayat, when you're doing that, is to also get your family members to do it. Get your kids to also have that culture of saving. Because what's happening now, unfortunately, uh, people are living the life of others. They're going on to Instagram, seeing how the other people are living. Restaurants are opening. They want to be seen in those places, and those monies, instead of going out there, can be used by opening up an account and saving. And I think if anybody needs more details, just go onto the Al Baraka website, www.albaraka.co.za, and there's a whole lot of options for them to consider.
Well, Shabir, Jazakallah khairan so much for that and also for your time with us this morning right here on Salam Media. Have yourself a wonderful Jummah ahead as well. And inshallah, we will obviously hold you to that discussion with regard to retirement planning. That's also another necessary discussion. So inshallah, at some point in the future, we will be having that discussion.
Inayat, thank you very much for getting on your show. I know I promised to come and view your studio at some stage. I'm going to make a special trip to come across. I think it's long overdue. But thank you for the excellent work that you're doing and also for providing a platform for people to be educated on various issues. So well done on that. And shukran. Juma Mubarak. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. The CEO of Al Baraka Bank, South Africa, Shabir Chohan, with us this morning. July, National Savings Month. The time is just gone 9:37 a.m. We come back, we'll be joined by Idil Ismail Muse, Director of Planning, Ministry of Health, Somaliland.